Hey guys, Josh here from MoneyMem. We'll do these videos each month just to let you guys know what's going on in the market so you can figure out how to refix your mortgages. But please get in touch with us for personalized advice and we can break things down a bit more for you as well. So you can see here we get sent every month a mortgage survey. So what other mortgage advisors are recommending around the country. So you can see here there's a strong favoured term, which is the 1 year term. So just under 80%, around 78% of people are fixing for 1 year. And around 18% of people are fixing for 2 years. And no one's really touching the 2, 3, 4, and 5 year rates. And that's because we're in a decreasing interest rate environment. So it doesn't pay to fix long term. But for some people, it does. So it just depends. But you can see there's a clear favourite there of fixing for 1 year. So this is what I mean by the decreasing interest rate environment. We're currently sitting at around 7% for the 1 year rate. They could drop to around 6.6 towards the end of the year, then down to 6 for 2025, and then down to 5 for 2026 and a bit lower for 2027. But really, we just want to see the trend there. So we know the rates are going down. So fixing for longer term doesn't really make sense if we're going to be fixing for more than 2, 3, 4, or 5 years. Okay. Macro environment. So what's kind of going on in the greater economy that's going to affect things and enable the Reserve Bank to reduce interest rates? Unemployment is increasing, but it's still got some way to go till the Reserve Bank's going to be happy. Wage growth, it's still too strong. So wages have still been going up a lot. I think costs for the average consumer has gone up 19% since 2019. Wage growth has been 25%. So it's still really strong growth, and we need to get that sorted. Or the Reserve Bank wants to see that reducing anyway so they can start dropping the rates. In terms of how much it costs the banks to borrow money, we can look at the swap rates. So the 1 year swap rates, this is just from last week's drop, from 5.34 to 5.28. So just a little bit, but it's been constantly going down for the last few months, which is what we want to see. 3 year swap rate, same kind of deal, 4.52% to 4.46%. So if it's cheaper for the banks to borrow money, it's going to be cheaper for them to lend it to us. So it's a good sign. Next official cash rates, 28th of Feb. Likely to stay on hold. We could see that start to reduce, around the mid to late next year. So have a little look at some of the data. So this shows a bunch of important economic indicators along with the next 4 quarters of this year. Okay, so GDP growth, 0.9%, 0.6, 1, then 1.1. So a little bit of a drop in the Q2 2024, but then getting better. So that's good. It means the economy is going to maybe take a bit of a dip, but then be growing again for the back half of the year. Unemployment, you can see it's going from 3.9 to 5.1, where the Reserve Bank kind of wants it to be by the end of the year. So that's really good. Inflation, 4.7% from this month's data, which came out a couple of days ago, and that decreasing over the next 12 months to about 3.3%, which is around the Reserve Bank's target of 1 to 3%. So that's really, really good. The 25-year average, I think, of the inflation has been about 2.2%, just for some perspective. Interest rates, so this refers to the official cash rate, not the rates that we pay. 5.5 is where we're currently at. So looking to stay on hold, but then looking to decrease in the back half of next year, which is where everyone's thinking we're going to get these cheaper rates as well. Interesting for me, business confidence, 33% currently, dropping to 18, then -8, then -15, and -24. So businesses aren't feeling very confident at the moment or forecasted for the next 12 months. Consumers, the opposite, which is interesting. So, consumer confidence, 88, 95, 100, then a small dip to 95. So consumers getting a bit more confidence. But reach out, fill out that quick form if you want some help. We'll call you back and give you some personalized advice to your situation. But hopefully this has given you a bit of an idea on what's going on in the wider market. Good luck.